fellas, appreciate you hopping on today. This is one I've been looking forward to for a while. Old Tom Capital. So Evan, Matt, appreciate you guys hopping on.
Glad to be here.
Yeah, thanks for the time.
Well, give us the background. Who are you, and ultimately, what are you building? Right? It's this unique model in a really growing and rising industry, which is golf or vertical of sports. So, how did you end up here? Who are you? What have you done in golf to this point? And then we'll start getting into the weeds of all the cool stuff.
Yeah. So we've built an investment group narrowly focused on the golf industry. So I think in this time of like lots of sports investing and sports investment groups, we've decided to take a bit more of like a narrow approach to just going after one pocket of the broader sports industry, being the golf space. We kind of came into this a little bit organically. So a few years back, we launched a private investment group called Old Tom Venture Club that is effectively a syndicate to allow for ourselves to write some checks, as well as some folks in our network to get involved in some companies operating in the golf space. Evan and I had done some angel investing ourselves outside of golf, and we're looking at golf, just kind of scratching our heads why there wasn't as much. There weren't as many dollars going into the space, like a lot of money going into green grass, like buying golf courses, rolling up golf courses, but not a ton going into all of the other pockets of the industry. And I think there's a ton of reasons for that. I think like there wasn't as much historically to invest in golf. There weren't as many operators and like sophisticated entrepreneurs building in the golf space, but that's really changed a lot. And so Evan and I, a few years back decided, hey, we're going to start looking around. We want to put some dollars into some things in the golf space. So now we're about 300 angel investors in a private venture syndicate, and have been writing quite a few checks. We've written 6 checks this year in 2024. Companies like Tomorrow Sports and Drivebox, you had a deal on. Birdie House is a company in the real estate space. Luso Cloud, a footwear company, kind of with a narrative in the golf space, and a bunch of others. So that's kind of the venture side. And then, we've started to now kind of also push into private equity and some other things within the investment community in golf, but just like unapologetic focus on golf, where we kind of are bringing our interests and our expertise. But yeah, Evan, you want to talk a little bit about that background?
Yeah. And I think the other thing to add on the general thesis here is that golf is interesting because it's large enough from a commercial perspective to provide return profiles commensurate with just about any other investable category. But it's also small enough to where the relationships that you can have in the industry allows us to de-risk investments and give them an unfair competitive advantage. And so, with our venture club, with the syndicate group, there's a lot of leaders across the golf industry that sit in that group that can be active on the diligence and vetting side of looking at opportunities. And then after we write a check, can be really instrumental in helping those companies scale and continue to grow and kind of outpace their competitors. And so it's like a kind of an interesting small world, but big enough that there's enough commercial opportunities. And then background wise, Matt and I are both entrepreneurs and operators by background. Spent most of our careers in high growth venture backed startups. And, Matt was one of the very earliest members of the team at Drizly and built that business as their head of growth from like idea through 100+ markets, and has a real operator and entrepreneurial perspective to bring. And I very much the same. My last company, I co-founded a company called Random Golf Club, which was one of the very, very earliest content to commerce businesses in golf, kind of the new wave of alternative golf companies. Started with myself and Eric Enderslang back in 2017 in Los Angeles, and really saw the shifting landscape of how the golf industry is changing, and not just like the tools and technologies and companies that are supporting the golf industry, but also the new wave of golfers that are coming into the space. COVID obviously was a real accelerant in that. And so a lot has changed. And, after leaving that company a few years back, and Matt and I just saw over and over objectively great opportunities over and over and over. And so building an investment firm seemed kind of the natural extension of that.
Love that. And yeah, I love how you guys took it's fitting, right? A membership, like model to golf, right? Which golfers are already familiar with. So it actually kind of aligns pretty well from that standpoint as well. And I'm curious on this because I believe, and this is my own hypothesis, but I would assume you guys think the same thing. So I'm curious how you guys view it or navigating it. But the venture world, the investment world is changing, right? And there's very much this more communal aspect. We're seeing it very much so in golf. How much did that play into this of, hey, we're building this model, but it's built different and we're trying to stay ahead of the times, not just with what golf is giving us.
Yeah. Yeah, it's I think that's very aptly said, and honestly, it's like seeing what you and the team are building with Profluence is like a big influence on us, right? Because I think that you're right. Like the landscape of alternative investment firms is shifting. Like the old traditional model of just like raise a narrow focused, fast deployment fund, stack funds on top of each other, write checks as fast as you can, and like hope for the best with the power law feels a little bit antiquated to us. And we both raised from traditional venture. We've been involved with private equity groups. And I think we set out to build a firm that is a little bit different than that. And so starting with a syndicate group that kind of democratizes retail investors, seeing great opportunities and giving ad hoc optionality with those investors deciding whether or not they want to write a check, and then looking at things on the private equity side where we can build a basket of cash flowing assets that are complementary in nature, and we can like feed the ecosystem into itself, like kind of made sense to us as entrepreneurs, not like coming from a big finance background. And I think it's a little bit more of an intuitive approach, at least for us, into how to deploy capital into a narrow category.
Yeah, and I think the world of sports investing, when you actually look at what a lot of the larger investment groups are putting dollars into, it's like, it's fractional ownership of teams, it's professional, it's the professional side of sports, it's media, it's like things that are there's a lot of competition over those deals. It's a lot of kind of broker dealer type stuff. And for us, we felt that if we could go in and over time become the most active and strategic investors in a category such as golf, that actually does lead to incredible competitive advantages both for portfolio companies and for investors. And that this perspective of like, let's go in and build great distribution first. And for us, distribution is like a huge network of investors who are able to look at opportunities in the golf space, see what's there, understand the sophistication of founders and builders and return profiles. And then over time, as you nurture those investors, like you bring in more opportunities, you bring in bigger deals. Like, I think that is to us a more interesting approach and model, like whether it's golf or whether it's something else. I think that's how investment firms, maybe firms like us, smaller, ones, are going to emerge over time, is like less of these massive, funds that are just kind of, as Evan mentioned, looking for like power law dynamics over, hundreds and hundreds of deals. But like, let's actually find a smaller number of deals in a category we know. Let's go deep. Let's have investors who will come from that category, or whatever. And I think that's going to lead to good return profiles for us.
I agree. And I, not to keep Evan out of this, but I think it's an important, at least 2-minute segment of when you're at Drizly. Obviously, for people that aren't familiar, was this alcohol delivery, got acquired by Uber for $1 billion. You were there, head of growth. I've been seeing a lot more on social media, even about these growth like teams and positions. What did you guys do there even that you've taken away and you're now applying into Old Tom, or you learned or saw that made it so successful?
Yeah, I mean, I think one of the first things is what I mentioned about distribution. Like, if you can go out and build great distribution in whatever market, whether that's a consumer company like Drizly or an investment group, like if you can build a strong relationship with customers and people in that ecosystem, then you can do a lot with that. I think what the lesson learned at Drizly, and then at a couple other companies where I ran growth after that, is also, stay alive. Like don't overspend. Don't, I mean, you think about like customer acquisition costs, and you think about, the companies that we see every day, whether they're consumer or software businesses or others, like, it used to be that you could go out and spend tons of money and build a great product. And basically, your path to growth is one slide in your pitch deck that just says, we'll run Facebook ads, or we'll go out and just kind of spend our way to growth. Like, it just doesn't work anymore. And I think bringing in a perspective of like, how do you stay alive as a business? How do you maintain, how do you create over arbitrage by just being in market long enough? How do you connect with customers? How do you ensure that the lifetime value of those customers is commensurate with what you're spending to acquire them? I think it's just those types of tools that are serving us well in how we both look at our own business as an investment group, and then also how we evaluate startups. I mean, so much of every startup is like, what is their believable path to actually grow? There's too many companies in general, and I think specifically in the golf space that are really strong, product ideas or just businesses that like have a good perspective on what they're building, but they don't actually think about like, how are we going to survive along the way? How are we going to actually break into that market? And so having a perspective on growth and thinking about things as a marketer, I think is serving us really well. Certainly you got to have the chops from a financial backer, from whether it's finance or deal structuring or things like that. But when you're looking at early stage companies, so much of it is like, you can't just model it in a spreadsheet. Like that's great, but it's all just kind of made up, at such an early stage. It's more about what's the believable path to growth? What's the narrative? What's the perspective? Who's the right team? So I think all of that those are things that we really draw from in our background now as investors to allow ourselves to find good success.
Yeah, that's great perspective there. I'm actually excited to go back and listen to that when we're done, just of how you think about it from distribution. And it's funny how when you've seen it, then your deployment strategies kind of follow that as well. So it's like you build it, but then you follow it a little bit.
That's right.
Evan, coming to you on the just while we're on it, when you're talking about what you're looking for, and there's these solid concepts, but there's certain intangibles they might not have. There's a lot of, I'm sure you see even more so than we do, but I just see a lot of golf companies, right? A lot of people that are interested in this space.
Yeah.
What gets you excited? What are some of these concepts, or where stage, like just sort of more like on the finance side overview of Old Tom and how you guys are thinking about it, stage, thesis, check size, whatever fits and makes sense to share.
Yeah, I mean, the nature of the golf industry, the same thing that makes it great as an investor, which is like general resiliency with the consumer base. There's kind of like the macro climate of golfers. Golfers are going to play golf. They're going to spend on golf when when the economy is a little down. They're going to spend when the economy's up. They're still going to spend, right? So the same quality there that makes it interesting also is a double-edged sword, because it also, I think, attracts a lot of entrepreneurs that are coming in because they're passionate about the space. But oftentimes what we see is a lot of those companies are solutions looking for a problem, right? And I think that the way we kind of think about this is we want to, one, make sure that any startup is solving a real problem or opening up a new part of the market, or focusing their efforts in a category of outsized growth within the segment. I think that's kind of number one, right? And so you kind of have to get past that barrier. But I think overall, as Matt mentioned when he talked about our portfolio companies, we have a pretty wide mandate because we're not investing out of a fund. Everything we do is an individual vehicle to find objectively great businesses run by great people with an opportunity to scale and kind of, a believable narrative to growth, as Matt said. There are pockets that like we're naturally drawn to, right? Like we talk a lot about, and I know you do in the newsletter and on LinkedIn, like the golf curious segment of the market, the fact that more people came in and swung a club at Top Golf and other golf entertainment, Drive Box and other off-course entertainment last year than all of the people that played on green grass combined, right? And so those people are still figuring out what they do next and how they like get started on their journey to become golf sickos, right? How do they move from golf curious to passionate regular golfers? And so there's a lot of white space there between Top Golf and going to play in a green grass. And so businesses and companies that are building in that space get us really excited because it represents like the largest untapped piece of the marketplace in our estimation. And I don't really think that there's a definitive solve yet, and there's not a definitive pathway to engagement. And so we're kind of looking at companies that are building in that space or that are, building the picks and shovels around some of the outsized categories. So like indoor golf simulators, like super popular, right? There's like ones popping up all over the place. Now, we have yet to invest in a 4-walled simulator bar. We think it lacks a little bit of the scale, but there are some folks that are building in the interoperability space that will connect all of the software programs and the hardware programs for golf simulators. So you could play on a TrackMan, I could play on a Foresight, and we could play against each other in real time. And like that interoperability question is one that I think somebody is going to solve pretty soon. And that gets us really excited. So like the systems and the platforms that are going to be able to tap into the rising tide in some of these segments get us really excited, and we kind of take a closer look. But at the end of the day, we want to look at companies that have a foot in golf. I mean, Luso Cloud, as Matt mentioned, they're a comfort footwear business, but what they're doing is really smart on the path to growth. Is that they have a really strong narrative in golf, but then they also have a strong narrative in surfing and MMA and other passion categories where they can be the before and after footwear that you wear while you are doing whatever you're doing, right? And so that's a good example where we can be really additive and helpful to them as a portfolio company throughout their growth within the golf segment, connecting them with greengrass distribution and, some great partnerships and et cetera. So we're not just looking at golf only companies. We're looking at companies that have a strong narrative in golf and that can do something really interesting in the space.
Makes sense. And I think what's cool about golf too is we've seen this massive fragmentation across it, not just from on course to off course and all these new players and the technologies, but also on the league side, right? With Live and PGA and then all these new other leagues. What's the thought on that from an actual pro standpoint, from the, we'll call it the IP side, the event side? There's a ton going, like the YouTube Creators Golf, which you guys put great stuff out on and we used for part of our newsletter. What are you seeing in that side of the space? We'll just call it the IP/event side.
Yeah, I think that and Evan has a lot of experience in building Random Golf Club kind of in these early days of like the content. But I guess I'll speak briefly to like, we're not entirely sure what's going to happen there. And I think that's exciting. And it's also like, there's definitely some volatility in that, like there's a flattening of how people are consuming golf entertainment now in the form of like, is it on linear TV with PGA Tour or Live? Is it on YouTube within specific channels on YouTube? Is it through new leagues with new players such as grass clippings? Is it in the aggregation of these some of these channels where you have new leagues that are actually aggregating these individuals and bringing them together on specific tours and specific events? There's so much happening there that I think number one, most of that is probably good for golf in general because it's allowing for new eyeballs to come into golf, and most of that is not in what we've seen cannibalizing eyeballs that already exist there. Certainly there's a little bit of that, but it's mostly adding new viewers kind of in that like golf curious entry point of how people are consuming the game. So we're really interested in that league side. We haven't made an investment there yet. We're absolutely like diligencing some of those opportunities, but they're I think there is a built-in kind of there's a hurdle that those aggregators will have to get over, which is that these are individuals trying to build their own brands on their own channels, and they're piggybacking off of big platforms like YouTube. And so is there a place for the aggregators to kind of come in and earn their piece of that by promoting large events and kind of bringing in sponsors or doing things that like a traditional tour like the PGA Tour or Live are going to do? So there's absolutely like disruption happening there. I think we're still a bit early in understanding which of those are going to be successful and which are just going to have some issues.
Yeah, no, it's going to be pretty interesting, call it decade. Because even you see guys like DeChambeau that like they feel they need to create their own content
Right.
now and just sort of leverage both sides. And so it's fascinating. We'll see how that all plays out. I think it's going to play out different than any of us think. That's sort of my perspective on it.
No, I totally agree. And I also think it's really unique, right? I mean, you don't see it's interesting about the golf creator space and the golf content and IP space. It's different than every other stick and ball sport, right? I mean, you don't have the same level of eyeballs on like basketball creators, football creators, any of the major sport. And I think that golf is golf is really good as an industry at democratizing all aspects of it, right? From the IP side with YouTube creators. I mean, more people watch golf on YouTube through YouTube creators than like all professional golf wrapped up together, right? And I think that back to the golf carriers thing, like when someone swings a club for the first time at Top Golf and they're like, man, this is cool, I want to be a golfer. First thing they likely do is open up YouTube and start watching golf creators, right? It's like the entry point, it's the pathway to real engagement. And I think that it's like how that will manifest itself in terms of investable opportunities, to Matt's point, like kind of remains to be seen. I think that we have a strong thesis in like physical tournaments and leagues, and some of these things are, I think, are going to be where a lot of this kind of funnels down to. But, you know, I think Tomorrow Sports is also an interesting one. I mean, we invested in that because it is a new version of professional golf, right? It's the merging of esports and made for TV entertainment product and professional sports league. And that's just different. Like what we hope is that it's going to be much more engaging and exciting than watching a traditional golf broadcast, because it's a controlled environment, it's a new format, it's et cetera, et cetera. And then you can imagine how like a amateur side of Tomorrow Sports or TGL League will kind of pop up where you and I can go play on some of the holes that the pros are playing. And it like has these pathways to engagement, and it pulls at the same thread that like you and I can go play at TPC Sawgrass and hit the same shot that, you know, Freddie Couples hold out on the 17th, right?
Yeah, I do think, Andrew, though, there's a natural question of like, what are viewers looking for when they view some of this content? Because you have personalities where we watch it for the personality and not like the level of play at like a level beyond what we can play maybe as amateurs. And then you have like the professional golf side, which is like maybe lacks that personality, but is just like really, really good play in general. And I think where you don't want to necessarily sit is when you have the merging of these two and sort of some kind of fluffy middle ground where you have like not great play and like kind of not great personality in the mix together. And so I think what we look for is like know your place and know what your audience wants, and be unapologetically kind of focused on that. Whether, you know, it's like we're really interested in what Grass League and Grass Clippings is doing in Arizona, because they're taking away one of the more difficult elements of golf, being like driving at the golf ball, kind of the long game, and they're going into par 3 formats under the lights where you can actually have like more elite players compete in that environment, but that have personality and are maybe even bring personalities from channels that they're already operating within, and you kind of like take it into a more of like a high action environment. And so I think there's interesting leagues and interesting concepts and all over the place, but it's like know what you're going after and do something that no one else can do. And I think that's a big feature of like who's going to be successful.
Yeah, I agree with that. And something you said in there, it rung with me. And you can only really replicate it in golf. I'd have to think through other sports. I don't know if there are any other ones, but like playing, you know, D1 basketball, it's like I know I played NBA guys. Like I know how good they are. It's the closest you can get to a sense, but I'll still never know what it's like to be put in the game.
Right.
With golf, it's like I've always thought about when you watch the Masters or whatever, like you could go play that course like right after with the same, how would you do? And so there is something there around whether it is on a simulator, because it's hard to go play the course right after. It's expensive. You need access. There's a ton of things that negate that, but that is interesting and a cool thing about golf. Another cool thing about golf, which I think is a testament to both of you, is the fact that, and why it makes it better to build in, you don't have to necessarily, like basketball, you see most people building basketball companies, they played NBA or they played college. It's like you need a certain level to even have credibility. In golf, you can just be a smart person that loves golf and you can build something and people will accept it, which I think is cool.
Well, and that's why I think golf is such a great place to build, which is why for us as investors, we think there's a ton of opportunity here as compared to some of those other areas of sport where, like, to your point, not just do you need to know the space, but you need deep relationships with leagues or with the, you know, if you're building a hardware business that's in professional league level stuff, like you better have a relationship with the NFL or someone in order to get devices or products within those playing environments, versus golf is like, most of the value in the golf industry is actually in the amateur recreational side of the game, and try to find that in a lot of other sports, and it's going to be challenging. Even most of it is in youth sports, frankly, if you're looking at at other sports. But in golf, it's kind of like it's youth all the way up to just the recreational play of anyone. And so we think that that's just a great place for entrepreneurs to build. And honestly, some of the best entrepreneurs we talk to in golf, many of them, like, they might not have a huge interest in golf. They might not even play a lot of golf. They see a good place to build, a good place to incubate, a captive consumer, a high lifetime value consumer. And so, I think that's why we want to be a little bit of a catalyst in the industry to say that, like, golf, like, come build in the golf space, right? Come invest in the golf space. Like, forget the fact that it's this fun, kind of sexy environment where, like, people love the game. It's just objectively a good place, a good, ecosystem to do some work in.
100%. And we're seeing also this shift, and again, is from 2020, it is from Top Golf, it is from YouTube. There's a bunch of different factors that play into this, but more the cultural element move in with Eastside and Malbon. What are you guys keeping an eye on in that space as it continues to sort of, golf is, I think there's so much fragmenting right now, but I really think golf is going through these shifts where you're going to look back in 100 years and be like, this time period was massive change.
Yeah. Yeah, that's part of what fueled our investment in both Quiet Golf and in Luso Cloud. Both are, both are interesting brands, not only because they have strong credibility in, like, the emerging wave of kind of alternative consumers and golf lovers, but then they also have really strong leadership teams and, like, check the box on their growth narrative and all of the other sort of, criteria that we look at through a diligence process. But I think, broad strokes and kind of on the macro, like, yeah, the changing landscape of who defines themselves as a golfer has rapidly shifted over the last number of years. Back even when we started Random Golf Club back in 2017, like, we started it largely because there was this disconnect between who even is willing to identify amongst their social circle that they are a golfer and they're passionate about golfer, and, like, what the perception of golf is to the general audience. Most people think of golf as, like, Sunday at the Masters, the course that looks like no other golf course on earth, and the pros hitting their best shot on their best day. It's like the NFL Red Zone meets Disneyland. It's like, it's bonkers. But, like, the reality of golf is that over 80% of golfers play on public courses. They go out there in a t-shirt and cargo shorts and they're just, like, playing golf. And so there's actually this, like, I think there's this wave of companies, like you mentioned, Eastside and Malbon and others, that are, like, capturing what I think is actually the reality of the golf industry and the golf consumer. And then I think it's also, like, the phrase of, like, making golf cool, I think, is kind of trite and overused. But I think ultimately what it's doing is that it's shifting the identity of a golfer, and for people to, like, be willing and excited to identify as a golfer and have brands that speak to them as consumers, and as golfers, and sell products that, like, support them on that journey. And so I think that change is, like, it is widening the net of golf. It's certainly bringing more people into the sport. It's saying, well, that actually looks cool, I want to go out and try that. But then I think it's also just, like, making golfers more proud in identifying as golfers. And I think what that does is it increases their level of engagement with businesses in the sport.
Yeah. And Andrew, there's, like, pulling on that thread a little bit more around Golf Curious, that if we had to pick one space that we're interested as investors the most, like as a kind of a narrative within golf, it's that it's when someone goes to a Top Golf for the first time, or when they pick up a Golf Plus VR headset and play a hole, or whatever they do after that, where can they go after that? They're certainly not going to an 18-hole traditional golf course and, like, teeing off on the first tee. Like, they're looking for something else. So we think that there is a gap right now. There's a bit of a chasm in that world, whether that is the facilities, whether that is the the accessibility of brands and technologies and tools and things. we think that is such a good place for us to invest and such a good place for people to build is where is that going? Because there's so much late, if you just look at the data, like the off course players, as well as the latent demand of like people who have said, hey, I tried golf and I'm interested. And I think maybe I'll become a golfer, right? But they're not golfers yet. They're not, in their own mind, they're not playing kind of a traditional form of golf yet. So where are they going to go, and what is that gonna look like? Like 80%, I think, of all the golf course projects right now around the world are private, like high end golf courses built for golfers. There's a supply problem in golf. It's at the entry point of golf. It's at the par threes, the municipals, the like public access courses, the short form versions of golf. Maybe even like, what's the pickleball of golf? Like, what's the next thing in golf that's fun, that's unique, that's different, that isn't traditional golf? So I think trend wise, that's where we're also we're looking and sort of putting our flag in the ground a bit to say, this is a great place. Like, let's not just build cool golf companies for traditional golfers, which is what we see maybe most often. That's a pretty small addressable market, by the way, of people. Yeah. If you want to build something big, go build it at the entry point, the golf curious side of golf. And, that's probably where you will also find the most venture scale kind of businesses versus really niche down tools used by golfers, traditional golfers who are psychotic golfers. And oftentimes that's what entrepreneurs who are golfers are building, because that's what they think about. That's what they care about. Like, think about the stuff that is for that totally different entry point of golf curious. And I think there's a lot of value there.
Yeah. I mean, the thing we say just to button that up is like, so you're a basketball player, you play D1, but like, what's the version of 3-on-3 or the version of 21 or the version of horse for golf, right? That is like, if you play horse, like, that's still basketball, right? You're still shooting a ball through a hoop, right? You still have to have a shot, but like, it's not playing 5-on-5 D1, right? Like, you're not getting your run in. And so it's like, I think that there's a spectrum in a lot of other sports, or there's flag football, and there's like, and then there's all the way on the other end, there's playing in Dallas Stadium, right? For the Cowboys. And there's like this spectrum that exists in a lot of other sports. But in golf, like, it's emerging, that spectrum. It's emerging. I mean, there's par three's been around for a long time, and then there's mini golf, and there's some other versions of it. But like, I think that we're excited to see the version of golf that is like non-conforming clubs in like a course that doesn't look like a golf course, with balls that are this big and a cup that's this big, and is more of that. And it doesn't need to be the same version of golf that's played at Pine Valley. It's just different, and that's okay, right? Because it's like, it's playing horse, or it's playing 3-on-3 or 21.
Yeah. The intermediary is interesting spot within golf. Yeah, no, this has been fascinating, Evan and Matt. Appreciate you coming on. Where can people learn more about Old Tom? Where can they reach out if they're raising money or they're interested in potentially participating in some deals with you guys?
Yeah, we're always happy to meet people. oldtomcapital.com. Whether there's accredited investors who want to look at getting involved in opportunities where we syndicate deals, or entrepreneurs that are building things that kind of have that like venture scale. Certainly we say that not everybody, most people probably shouldn't go raise money, like go build a great business and fund it yourself and do well. But certainly like companies that are looking to scale and are in the golf space or have a golf narrative, happy to talk. But people can sure. Google Old Tom and find us.
Love it. Super cool. Yeah, we'll make sure to get all the links up and to a better future in golf. Let's keep it rolling.
Thanks,
Andrew.